Matt Anderson is a partner at Foresight Analytics. And Matt, great to have you with us.
Thanks.
Are you as worried as Elizabeth Warren when it comes to commercial real estate and the failures in the community bank sector?
Yeah, I think, well, we certainly have major concerns about commercial real estate exposure especially at the regional and community bank levels. I'm not sure we would come out with exactly the same conclusions, but it's a very serious situation, very serious exposure. And in terms of the impact, I mean, you've already seen a huge drop in prices, as you were noting. Some of the distressed deals that have come out, prices are down roughly 40% or more from their peaks in 2006 and 2007.
Right.
So sorry, go ahead.
Well, I was going to say, and some would say that there's a leg room lower for that, or that this is perhaps a time of great opportunity then. Which do you see it as?
Well, both. Depends on which side you are. And how leveraged you are at the moment, or that you were going into the downturn. So obviously leverage can cut both ways. If you levered up heavily, which a lot of people did at the wrong time in 2006 and 2007, then you're certainly paying the price now. For investors that were more conservative, you mentioned Simon's run on general growth. Mm-hmm. Simon's spent the last year raising a very large war chest of all sorts of money, cash and so forth, that's really enabling them to make that bid. There aren't too many, I should add, there aren't too many other players that either can or are willing to make that sort of bid at the moment. So I think that the timing is very opportune for them if it works out. So
does that mean, though, if there's not a lot of other candidates out there, then does that mean that this M&A activity we're not really going to see this huge flood at all?
Probably not quite the flood that maybe people were expecting last year, for example. There's still a wide gap, I think, between buyers and sellers' expectations. So really, distress is about going to be the main activity during 2010. Although, there are some signs of life at the other end. Mm-hmm. Some trophy properties have changed hands. So I'd say very high quality, very safe properties in your best markets too that
are still going to do well there.
There actually is some money flowing in there. Yeah, so it'll be a bifurcated market as we describe it, certainly in 2010.
Matt, are you seeing a bottoming though anywhere? Because if you look at some other indicators, some are saying, some of them are indicating that there is a bottom in at least some parts of the country with commercial real estate.
Well, I think that's true. So on the price side, we probably have seen the worst in terms of the correction. REITs, which we were talking about a minute ago, prices are up roughly 50% or more from the lows in the early part of last year. They're still down roughly 50% from their peaks in 2007, though. So, there's you can kind of look at the glass, whether it's half empty or half full. The price declines are, I think, guaranteeing that we're going to see a lot more distress on the debt side, though, during 2010, even with somewhat of a correction or rebound in prices on the upside.
Okay, well, commercial real estate is certainly something that we've been watching very closely on this program. Matt, thanks so much for joining us. Matt Anderson, a partner at Foresight Analytics. And